Hello and welcome to Crypto Republic. My name is Sri. I hope all of you had a wonderful holy wishes to all the viewers. So, what are we discussing today? Well, we're discussing about an article that came and did a lot of rounds. They came in Economic Times and it did a lot of rounds yesterday. We'll discuss that, and before which I would like to say that this is a video for educational purpose and based on my opinion. It's not a financial advice. Please do your own research before investing. So, this is where the article is. Now, Devan Sharma, he writes, you have more reasons to stay away from bitcoins and other cryptocurrencies. So I thought I'll just have a look at this article and we'll have a small discussion about it. So he says, other than investing in unregulated space and potential risk of losing your money by falling prey to Ponzi schemes, you have more reasons to stay away from such investments. And he lists 6 reasons. Now let's go through them one by one. And I'll have the link to this article in the description below. So you can, if you want to go through the entire article, have a look at it. So the first point is banks have started stopping purchase of cryptocurrencies with their cards. And it mentions credit and debit cards cannot be used to purchase cryptocurrencies. Well, it's a fact that banks like Citibank, Bank of America, JP Morgan Chase have blocked their users from using their credit cards to purchase cryptocurrency. Reason being, if somebody uses credit to purchase cryptocurrencies expecting the prices to go up, but the prices go down and they are not in a position to clear their dues, that is a credit risk for the banks. However, there has been no information about debit cards stopped. At least in our case, that is in India, first of all, none of the exchanges accept credit cards. They only accept bank transfers as of now. So that's not going to have any implications for the Indian investors. So this particular point does not hold good for us as of now. Crypto exchanges halt trading, ask investors to take back money. Yes, this is about BTC X India and ETH EX India. Now, these were the 2 exchanges that are about to close on the 5th of March. That's a couple of days from now. However, they had already stopped accepting deposits from investors starting the 1st of January 2018. Now, in this article, it says that the exchange reasoned that with the government discouraging cryptocurrency trading, it has put our business under a lot of pressure, stress, and putting us in a position where we don't feel that we can continue our business in a professional manner any longer. This is a little fabricated, I would feel, because the budget session happened much later than the 1st of January. So the exchange had decided to close down before the government discouraging cryptocurrency trading. Now, in the risk the author mentions, you do not want to be in a position where your money is stuck and you have nowhere to turn to get it out. Such a situation has never happened, and again in this particular case also, around the 1st of January itself, the exchange had sent mails to all the investors to withdraw their amounts on or before 4th of March, which was good 60 days of notice. So this risk also does not seem to be likely. Not all cryptocurrencies will give you sky returns. Anybody in the investment sector, unless and until he is actually into gamble, the word that he has used here, just going there because everybody else is, knows that not all the stocks give the similar returns, not all the bonds give similar returns. Similarly, not all the cryptocurrencies will give the similar returns. Hence, you have to be very well informed and a researched investor. Nothing new about it. The only one thing that I could find funny here is, besides there can be unlimited number of cryptocurrencies, but within each currency there can be self-imposed limits on how many units will be issued. So to clarify this part, I would like to say that there is a self-imposed limit, and that is exact nature of cryptocurrencies, that they are limited in numbers. Tax trouble? Well, it's not a trouble. If you have gained money, you have to pay tax. As of now, there is an ambiguity regarding the tax status, and there is the tax income tax department is working towards creating regulations to tax the cryptocurrency gains. As soon as that is done, I'm sure anybody and everybody who is a law-abiding citizen and who has made money would have no problem in paying his taxes. So this also tax trouble, it's not a trouble. If you have made money, you're anyway paying, whether it is through cryptocurrencies or any other asset that you make profits from. Government's averse stance. Well, very strong words used. But what was mentioned by the finance minister is that government does not consider cryptocurrencies as a legal tender. Yes, of course, it's a fact. And nothing is surprising about it. Why? Because it is not made by the government, it is not controlled by the government or the RBI. So why will the government consider it to be a legal tender? Now, not considering it to be a legal tender does not mean it is illegal. However, the Apex Bank is yet to declare such transactions illegal. Now, in this statement, the author tries to imply that there is a possibility that Apex Bank would declare such transactions illegal. But there is nothing of that sort as of now. So this is confusing. Now, if the purchase or trading of cryptocurrencies are banned in India, existing exchanges will have to shut down, which is a fact if trading of cryptocurrencies are banned in India. During the budget session, time and again, there were a lot of people who asked the finance minister whether he has any plans to ban Bitcoin, to which he categorically replied that there is a committee which is formed to come up with suggestions as to what needs to be done. Based on the suggestions, the government will think on the further course of action, and the committee is supposed to submit its report towards the second half of 2018. KYC timeline and volatility in prices. Here, yes, KYC takes time depending upon exchanges. The only wrong information in this part is the turnaround time for KYC verification is different for different wallets. I would like to bring it to your notice that wallets don't need KYC verification. It is only the exchanges that need KYC verification, and that's a good thing, because if you remember the recent raids that the IT department had on the exchanges was just to figure out whether or not the exchanges are following the procedures to take the KYC details of each and every investor on their exchange, and they have come clean, and that's a good news. Should you buy? So coming to the conclusion, he says that earlier, for a long time, Bitcoin wallets and cryptocurrency exchanges argued that the Indian government had not declared virtual currencies illegal and investors shouldn't hesitate to invest. True, the status quo continues. So he says that nothing has changed so far. However, his conclusion is, but in the present scenario, buying and redemption are becoming major issues for investors. Based on what? I don't know. In the entire article, there has been no point where he has proved that somebody was not in a position to either buy or redeem what he had invested. So this article is quite far away from truth and misleading. Other thing I would like to highlight is that the same author had written another article a week ago, on the 23rd of February, wherein he says that if blockchain technology was used for transactions and accounting, the fraud at PNB, Punjab National Bank, could have been prevented or at least detected earlier. And now more than ever, it is time when those in power should understand the need to implement blockchain technology in the Indian banking system. So this is quite contradicting, because the cryptocurrencies, Bitcoin, Litecoin, and other privacy tokens, all of them have already been pointing out the same issue, and that is exactly the reason why there are a lot of people like me who are enthusiastic about this technology. Now, coming to the end of this, he also mentions that the government is looking to implement blockchain technology for land records and electronic health records. This is very important, and this is going to be a game changer in these two circles. And towards the end, he mentions it will be the best in the best interest of banks, as it can increase security and allow for tamper-proof transactions. Also, blockchain can make transactions faster, cheaper, and bring down the cost of services. Anybody in the cryptocurrency space knows that that is the exact reason why we have cryptocurrencies. The only point here is that if we have cryptocurrencies, we don't need the banks anymore, because by itself, cryptocurrency transactions are faster, cheaper, and it brings down the cost of services. So why do we need the banks? Well, with that question, I would end this video. Tomorrow we will be looking into this particular article, which says $9 million a day is lost in cryptocurrency scams. So we'll figure out what are the kind of scams that we need to be careful about, that even the author of the article mentions. So, ladies and gentlemen, I hope you like the video. If you like the content of the video, please like and hit the like button and share the video with your friends and people that you know who might be interested to get more and more information about this space. Don't forget to subscribe if you haven't subscribed yet, and please hit the bell icon so that you get your notifications timely. Thank you and good day. Let's see you in the next video.